XRP is the most hated successful cryptocurrency in existence. Retail calls it centralized. Bitcoin maxis call it a banker coin. Banks won't publicly touch it, yet it processed $15 billion in institutional volume, survived a 4-year SEC war, and just got approved for CME futures in 2025. Confusion isn't about technology, it's about timelines. Retail is trading 2018 narratives. Institutions are positioning for 2027 infrastructure. And most holders, they're stuck in the middle, not understanding which game they're playing. You don't hate XRP. You hate not knowing whether you're holding a speculative asset or infrastructure equity. That confusion is expensive. So, here's the question. What if XRP was never meant for you? And that's exactly why it might work. For over a decade, misinformation has been crypto's most profitable product. Many retail investors still believe Ripple can print XRP like the Fed prints dollars. They can't. The supply was locked in 2012 at 100 billion tokens, finite, pre-mined, and mathematically sealed. Each transaction burns 0.0001 XRP as a fee, and by mid-2025, more than 14 million have been permanently destroyed. Ripple's escrow holds about 35 billion XRP, fully auditable on-chain. 1 billion is released monthly, with roughly 70 to 80% returned to escrow. In 2024, only 200 to 300 million XRP entered circulation for real use. That isn't inflation. It's controlled scarcity, wrapped in fear. Then comes the centralization myth. Ripple runs only one validator out of 35 on the default UNL, while more than 150 independent validators operate globally. Finally, buying XRP isn't investing in Ripple Labs. Ripple is a private company. XRP is a public digital asset. The 2023 SEC v. Ripple ruling confirmed that XRP sold on exchanges is not a security. In the court's words, XRP is not in and of itself a contract or scheme. Every myth survives because people prefer belief over research. Retail wants to own a revolution, not understand its mechanics. They buy headlines, not protocols. So now that the myths have fallen, the question is simple. If the lies fade, who profits from the truth? 2025 isn't about payments anymore. It's about plumbing. The rails beneath the financial system that no one sees but everyone depends on. XRPL has closed over 93 million ledgers since launch, powered by 150 plus independent validators worldwide. Compared to Swift's $5 trillion daily transfers, XRP looks small. But that's the point. It isn't replacing Swift. It's infiltrating the cracks where Swift fails. Cross-border corridors between Asia, Africa, and Latin America, crypto to fiat on-ramps, and remittance markets starving for efficiency. Ripple's roadmap says everything. Central banks in Bhutan and Palau have launched CBDC projects using Ripple's technology, while European central banks test Ripple's permissioned ledger for wholesale settlements on private networks, not the public XRP token. The RLUSD stablecoin is live with 1.02 billion market cap. The EVM-compatible sidechain already launched in Q2 2025, enabling Ethereum smart contracts on XRPL, and wormhole integration connects XRPL to 35-plus blockchains, including Ethereum and Solana. ODL adoption in Asia-Pacific now accounts for 56% of global ODL volume. The narrative isn't hype, it's infrastructure. Retail celebrates headlines. Institutions measure throughput. Ripple's announcements aren't promises, they're pipelines. Every corridor built is a quiet shift of power from speculative chaos to structured liquidity. This isn't revolution, it's assimilation. So the real question is, when financial giants finally start moving billions through XRPL, will you recognize it as adoption or as surrender? While the Rails debate plays out, another infrastructure story is moving behind the scenes. let me introduce Uni, the platform that's changing the game in crypto trading. Uni's OTC exchange has already processed over $1.3 billion in OTC trading volume, giving both buyers and sellers the flexibility they need. With over 6.5 million active users and 500K plus followers on X, it's a platform built for scale. This is not financial advice. The link is in description. The XRP thesis has never been about technology. It's about regulation, infrastructure, and control over the rails of global finance. Ripple isn't just selling software. It became the first DLT company to join ISO 2022 in 2020, and now partners with over 10 central banks developing CBDCs. The dream scenario? If 10% of Swift's $5 trillion daily volume migrated to XRP rails, that's $500 billion in settlements per day. But XRP's current ODL volume sits around $40 to $50 million daily, a 33x gap that demands trillions in liquidity and institutional trust still missing. Analysts see fair ranges from $10 by 2026 to $50 by 2030. The $135 figure assumes full G20 adoption, an unlikely scenario. Reality, however, cuts deeper. Most central banks are building CBDCs on Ripple's private XRPL instances. Ripple profits, XRP holders don't. ISO 2022 lets Swift modernize without blockchain, but it also enables XRP's interoperability, leaving the door open. As of August 2025, the SEC's appeal is dismissed, and XRP is confirmed non-security in the US, while the EU finalizes MiCA. The truth is separation. Ripple earns from enterprise clients. XRP holders win only if the public token becomes the global bridge asset, and that outcome is far from guaranteed. The truth is, XRP's future depends on two victories. Ripple must convince banks to adopt their rails, and those banks must then choose public XRP over private stablecoins. That's a double bet in a world where institutions rarely take one. The risk isn't that XRP fails, it's that it succeeds quietly, without rewarding those who believed first. So, as global liquidity shifts into programmable money, the question becomes clear. Will XRP become the bridge for the next financial empire, or just another tool buried beneath it? Ripple is a company. It can fail. XRP is a token. It can outlive them both. XRPL is a blockchain. It will keep running long after the headlines fade. 3 entities, 3 risk profiles, 1 mass delusion. That delusion costs retail billions. When Ripple announces a deal, ask, does this boost XRPL usage or just Ripple's revenue? When XRP pumps on news, ask, did ODL volume rise or is this exit liquidity? When someone screams centralized, ask them to count nodes. If you're holding XRP, you own a bridge currency hinged on institutional adoption, not a tech stock. If you're avoiding it, you're dodging regulatory and escrow risk, not necessarily tech risk. Either way, know your bet. The market rewards clarity. It punishes confusion. Institutions separate Ripple from XRP in their risk models. Maybe you should too. Quick update on Unic. Their IDO for the UN token is live. The project markets a low FDV approach, referral rewards, and NFT perks for early participants. They present themselves as an on-chain OTC liquidity layer aiming to capture pre-market and institutional flows. Again, not financial advice. Check the link in the description for Unic's token page and white paper before deciding. History rewards the architects of systems, not the passengers arguing over ticket prices. Ripple builds the rails. XRP moves through them. XRPL keeps running, blind to the noise. Confuse those roles, and the market will teach you the difference in losses. Subscribe to Wealthy Wise Finance. Drop your opinion in the comments, because when the future of money arrives, the only question left will be simple. Were you building the bridge or paying to cross it?